Welcome to the Big Mike Fund Podcast, where you'll learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in. Because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fund Podcast. I'm the Big Mike Zlotnik, and today it is my pleasure and a privilege to welcome Dave Wolcott. Hi, Dave.
Hey, Mike. How are you?
I'm great. How are you? Thank you for coming on the podcast.
Absolutely. Yeah, I'm grateful to be here to connect with you and your audience.
Yeah, I appreciate just a couple of words about Dave. Dave was a captain in the Marine Corps, so thank you for your service. Much appreciated.
You bet.
And he has a wonderful story to tell. He had to get away from Wall Street and not investing when you had triplets. So let's talk about your family first. And before we do that, Dave is a founder and CEO of Pantheon Investments, and he is a recent author of the book called The Holistic Wealth Strategy. So we'll jump into that in just a few minutes. But before we do that, would you be so kind as to tell us about you and your family?
Sure, Mike. It all started for me, probably like a lot of those in the audience, right? Following that conventional wisdom that was out there in the time, which is go to school, get good grades, you're going to get a good job. And that was the recipe for success, right? So I kind of followed down that path. I did the ROTC program, got into the Marine Corps after school, and really had an awesome time serving my country, being part of the Marine Corps, and really learning some skills you don't learn in academia anywhere else. I mean, things like leadership, teamwork, real integrity, things like that. And then once I transitioned into corporate, right, and I was actually in your industry as well, in the tech industry, I really got quickly disappointed, right, because I lost that sense of purpose, that sense of mission, that the military has, and creating impact and things like that. Everything was around quarterly numbers and that type of drive. And at the same time, I had been just kind of cycling through financial planners, and everyone, I paid more for their advice, but it was all the same advice. It was just put your money in your 401k, max it out, defer your taxes, and that's the recipe, right? And then on October 24th, 2000, my wife and I had a toddler running around, and then we actually had triplets. So we quadrupled the size of our family. And I can tell you, Mike, I mean, nothing will have you, more greater examine, the financial aspect, right, of your financial well-being in your family than, quadrupling the size of your family, right? So this kind of put me on this, this really intensive and obsessive journey with figuring out how are the 1% actually building their wealth, because it's not as a retail investor, in Wall Street. And I think, even before I had started a business, it was really the entrepreneur in me starting to ask a lot of questions, about this system and about this, whole machine. I think some similar time frame as you, back in 2000, actually, and literally this is, Rich Dad, Poor Dad had just come out like a year before that. A very conceptual, great book, but still very conceptual. So how can I put that to use, right? Besides doing single family rentals and things. So I started getting into private equity, investing in all kinds of alternative assets, everything from oil and gas to raw land, to multifamily, to office parks, retail, like everything basically. I started a tech consulting business as well during the time. Built that for 15 years. Another tech company in there as well. And running a business, I learned a lot about taxes, right? So fast forward, 20 years later, and I was really trying to take all of this wisdom and really trying to package it. And I think part of that was, some of my process consulting background and everything, and trying to say, I need to really systematize a way for people to figure out how to build wealth, right? Because you read a great book and it's like, okay, well, there's a great idea in there, or there's a great product over here, but how do you really put it together? So essentially, my book encapsulates that 20 years of learning and different experiences across different asset classes. And that's framed out into what we call the holistic wealth strategy.
Yeah, that's a great introduction. Appreciate your family story, as well as obviously your service and spending some years in the corporate world. We both came to the same conclusion after some years of working for other folks. Most successful entrepreneurs realize some sooner, some later, they have to do their own thing. And there's nothing wrong with working in the corporate world, but being kind of your own boss and leading it's also personality. Some folks are leaders and some folks are not. If you want to be a leader, if you enjoy being a leader, it makes all the difference. So now let's actually dive into the holistic wealth strategy. It's a very powerful idea, and I guess it serves the 1% of Americans or other folks in the world who want to build, I guess, their success story. So tell me a little more. Some of the key principles of the book, some of the key benefits. How does it work? Obviously, folks should go get the book, but just give us a little bit of clarity and visibility of what are these fundamental principles or structures, or how does the plan work?
Absolutely, Mike. I'll give you the 30,000 foot overview, but essentially it really starts with creating a vision statement, for you and your family, right? If you don't have a target, you're going to miss every time, right? And I think so many people out there just don't spend enough time in terms of designing their life, right? Tim Ferriss calls it lifestyle design, right? So are you intentionally really creating that vision for what the ideal day looks like for you, your ideal future, with you and your family, So it's very important, I think, to level set and really understand where it is you're going. Right? Because that really sets the foundation to then, okay, well, what different approaches can we use to help kind of get there? So once we establish our vision statement, we move into, there's basically 5 simple phases, right? And the first one starts off with mindset, right? This is all about, having a growth mindset, right? So many of us were inundated by this $30 trillion financial services industry that's saying, put your money in a 401k is the best thing you can do. Pay off, the debt on your primary residence. That's the smartest thing you can do. So advice, middle-class type advice and things, without people really asking questions and saying, is that really right for me, right? And does that really support things? So you really have to have a growth mindset. You have to be able to be a lifelong learner. You have to be able to ask questions because, again, as you coming from the tech background, right, it's all about, data, right? We need to look at the facts and be able to make, appropriate decisions, right? So the mindset is really key. And then you can start creating goals and habits, towards your vision statement. In phase 2, we talk about increasing your IQ, in several different dimensions, financial IQ, mindset IQ, your health IQ, and also your relationship IQ, right? We talk about health because so many people trade their health to achieve wealth, right? And just think, how much would Steve Jobs had actually paid, had he could have been on the planet a little bit longer, right? He would have paid an inordinate amount. So focusing on your health right now is really key. And I think taking a proactive and preventative standpoint on that is really good. Investing in your mindset, things like masterminds, right? Things like listening to great podcasts like this, where you can just expand your ideas, get new ideas, new insights and such. And also financial IQ, right? This whole world of building wealth, a lot of it is around financial reengineering, right? So you're only limited to as much as, your brain is going to allow you to conceive, right, certain ideas. So the more you can learn about it, the more you can reduce your risks, make better decisions, become a better investor. So that's the second phase. And then in the third phase, we move into creating the proper infrastructure. So many people do not have the right infrastructure in place for building wealth, especially if you want to build true legacy wealth. And it's, I don't really fault people, because I was, subject to this as well. Is just, this isn't really taught anywhere. Nobody really understands how to do this. But I can tell you that, after building a few businesses and firing 5 CPA firms, I finally found the right CPA firm that dealt with me and created a proactive tax plan that was forward-looking. We structured how my business is, my life is, my investing is, to really, change the way I looked at taxes and actually be a partner with the government versus just paying the most amount. Right. So having a proactive tax strategy is super key component. We also, we're such a firm believer in this concept around infinite banking. My family has been practicing this for almost a decade, and we actually got our license so we could help our clients deliver infinite banking as well, which is, essentially a cash value whole life insurance policy that compounds completely tax-free. You could give it to your heirs tax-free. And the really amazing thing is you can borrow against it, right? So you can borrow against that cash value to go invest in the next opportunity. You can use that right now for your capital reserves fund. So, it's a real multiplier, right? By being able to have that capability. We also talk about estate planning is really key, right? And asset protection. It's not only multiplying your wealth, but it's also about protecting your wealth. So that's a really key component in that infrastructure phase. And then we move into phase 4, which is called asset repositioning. So oftentimes people say, that's great, I've learned a lot, I'm starting to set up the structure. But then they say, Dave, I don't have, 50 or 100K lying around right now to make an investment, right? So what can we do? Well, over 90% of Americans essentially have their capital tied up in 2 places. It's government-sponsored qualified plans, like 401ks and IRAs, and it's tied up in the primary residence. Right. And the last time I checked, the rate of return on equity in your primary residence, it's 0. Right. So if you're not actually leveraging, your capital in the most efficient way, you're doing yourself a disservice. Right. So looking at opportunities like that, we actually even built a 401k exit calculator, Mike, where you can if you look at, say a 401k position and exit it, and a simple example of taking 100K, you pay the penalties, pay the taxes today, and say you take 100K, and now you have 55K left over after that to invest. And if you invested that into something like, your fund or a real estate syndication, it's unbelievable when you model this out and you see that 55K over uninterrupted compounding tax-free for 20 years can yield potentially over 2 million. Versus if you keep it in your 401k, your after-tax number is around 250K, right? So it's really amazing, right, to understand, how some of these kind of principles work, right? And then we jump into the last phase, which is all about building massive passive income, right? So on top of, your capital stack of having this, liquidity pot in your infinite banking, you've created the right infrastructure. You now want to start layering on some of these private investments that are really basically asymmetric in nature and much less risky than investing in the markets, right? We're looking at assets that basically have tax efficiency to them, that they have some type of predictable income, and then they have some equity appreciation upside potential to them. And as you keep growing and keep investing in that base, you keep growing your passive income base, right? And you're also staying very tax efficient the whole time. And that's, how the ultra wealthy, that is really the blueprint of how the ultra wealthy, are not only maintaining, but really, thriving. And I would say in all market conditions as well.
Wow, that was a lot. I appreciate the wisdom, the 6 phases, and number of things you mentioned make absolutely great sense. Certainly familiar with infinite banking to the nth degree, and the alternative investments is all we do. So from that perspective, I'm completely in agreement. You can generate much better rates of return with a higher predictability through real estate and other alternatives versus, generally speaking, the Wall Street instruments. And then the 401k, basically qualified, non-qualified money. What's really interesting is what you said is you could take 100k out of your 401k, pay the penalties, and invest. But you could actually convert your 401k to a self-directed IRA and invest the same 100k without any penalties into alternatives. So I'm sure you cover that too. But the power of a mindset is also, thank you for bringing that point up. The mindset is basically the beginning of everything. If you don't have a mindset, you can't really get over even basic hurdles. So makes a lot of sense. I think your book, it's got to be really interesting. I'm looking forward to get a copy myself. Would love to kind of get a little more in-depth view or your plan versus what I've seen on the legacy front from other folks that do this. It makes a lot of sense. And infinite banking, sure. I mean, I use it. My family uses it, and most interestingly enough, it comes back sort of the Rockefellers of the world. These ultra wealthy, they've been using it for the longest time. It's got the tax-free benefits that you can pass to your heirs, but it also works as an incredibly powerful tool to have access to cash and have the cash grow in your policy, as well as obviously borrowing from the policy and deploying it in other aspects. So how do you work with folks? Just taking it to the next step. You have the book. And I don't know, what does your company do? Is the company that's financial planning? Do you have your own funds? I'm just curious what beyond the book. Explore a little bit more into how do you work with folks?
Yeah, Mike, this is really a passion project for me. Right. And we are trying to basically create value for our investors. I wake up every day trying to solve different problems for our investors, creating value in multiple different ways. So essentially, our business model is that we partner with other what we believe are superior operators in different asset classes to be able to solve different solutions. So for instance, we have an oil and gas fund, which is you can 100% deductible against active income. So a lot of our high income entrepreneurs, doctors and dentists, right? I mean, this is such a great solution because they can offset their active income, right? So we're partnering with some of those great, operators around different asset classes, around different niches, also different markets. So as people are building out their portfolios, we've taken that headache out of the way of, vetting and doing all the due diligence, providing additional value for them and things like that. So that's one of our primary business models. We're also helping people establish infinite banking policies and infrastructure for themselves. And then we're also rolling out a mastermind group that will have some group coaching. Mastermind will be rolling out shortly as well.
Very cool. So it's an energy fund, mastermind, and with coaching, and I guess you do a number of things in infinite banking, right? So these are pretty powerful ideas. Makes a lot of sense. So how do you, just a quick color on infinite banking? We were obviously seeing rapidly increasing interest rates. The Fed went too fast and too furious. They pushed the rates up like there's no tomorrow. what's been the impact on the infinite banking? Has these whole life policies gotten better for investors? I would imagine that with high interest rates, insurance companies can actually make better return now on their capital. They should be paying a little more on the policies versus a little while ago, although they move very slow, but they should still be reflecting high interest rate environment. Just curious what has transpired.
Yeah, there is some increase in terms of the dividends that are being paid out, but also the loans have actually gone up as well, the interest that you're paying on the loan.
So
But
what do you pay now? I'm just curious if you have a policy and
I mean, I have one that I'm paying 3.25%, but all of these are so different, Mike. Depending on how they're structured, and this is a really key component because a lot of people, there's so much misinformation out there in the industry, and what I've learned is that if you were to call your financial planner, your life insurance company, and say, "Hey, I want to set up this policy like this." Number one, they might not even know what you're talking about. And then number two, if they say, okay, they do, you're not being able to necessarily structure it the right way, right? So you have to be working with a mutual insurance company, number one, company that's been around for, over 100 years, not a stock insurance company is really key. And then having something properly structured. And what I mean by that is that a lot of these planners out there will actually structure these the opposite. So they get the biggest amount of commissions like on the front end. And we structure them the complete opposite, right? And we also structure it in a way that you're using, the IBC. The IBC is really a practice, a process, right? So it's not just like you don't just plug in the product, you actually have to practice it to be able to maximize the value of it. So we try to help, clients, advise clients on that as well. And, I think what was really fascinating to me, Mike, as to, I was going through this investment process and, I still am all the time. But there's a few really key things about some of those phases too is, number one, I'm always looking for a multiplier on my money. If I buy $1,000 worth of Tesla stock, all I have is $1,000 of stock. And the only thing I can hope for is the stock is going to increase in value, right? But we all know that stock can actually go sideways or it can go down also. If I invest $1 into an IBC policy, for instance, I'm growing, compounding tax-free. I have some asset protection built into it. I can creating a legacy. It's part of my legacy plan because I can give it to my heirs tax-free. I have the liquidity component to it, which is a major gap in investing in private equity, is not having enough liquidity. So where do you keep liquidity to add enough velocity to your portfolio? This is a fantastic place to do that. Whether you're an entrepreneur running a business, where do you keep the capital? Keep it in here, or you're an individual worried about the economy right now. You know what? Put in 12 months of runway for yourself and your family and stop worrying, So looking for things that are actual multipliers on where you're putting your money. And then when you follow this, strategy and you have this overall wealth strategy, it weathers whether the market's going up or down. And it also has this exponential effect because you're doing multiple things at the same time. So all of a sudden you get to the end of the tax year and you go, wow, my taxes are 100K less this year. Oh, I guess I can go invest in another asset. Now I put that, now I buy another asset and now I just increase my passive income. Oh, and that's coming in tax-free. Okay. And I'll take the income from that and then put that into my IBC policy. And now, now I'm compounding it almost 6%, plus I've got a little spread on the deal that I did, right? So this exponential effect really compounds.
Yeah, I appreciate that sharing. That makes a lot of sense. And I'm well aware of the policy design is a critical component. The traditional life insurance agents will sell you the most beneficial policy for them that
Yes.
generates the most commission. Now, those policies are not necessarily wrong. They just work differently versus
Correct.
policy that gives you a lot of liquidity up front. And it is a very powerful concept. The best way to look at the life insurance policy like this is what I've been told, is that it's kind of a safest part of your portfolio. It is still an investment with obviously access to liquidity, asset protection elements, but it grows kind of the cash in the policy way faster than the cash in the bank. There was a lot more contrast to this when the interest rates were very low. You could still get 5.75 in your policy, well, when the banks were paying 0.25%. Now they're finally paying maybe 2% with rates haven't gone up. Still, the policy makes a lot of sense. Let's go quickly, just a couple of words into oil and gas and how that works. I've heard of that, not invested into this, but just shine a little bit of light and explain. Somebody writes 100K into an oil and gas, exploration and development project. They get $100,000 immediate deduction against their ordinary income. And then what happens? What do they own? They own a piece of the well.
So I'll tell you how it works, Mike. So 95% of basically all oil and gas that's done, it's an income play, right? So people are buying some kind of, there's variations to it. They're buying some type of working interest into, carbon capture, right? Into, mining for oil and gas. Now, we have a very unique, because our investment thesis, very much like multifamily, is looking for tax efficiency, predictive passive income, and then also some kind of upside on the back end. We have a really unique partner that we're working with that actually simulates all of those, and they're very innovative in the industry. So if you were to invest 100K, you would actually get year one, we forecast more like 80% in year one is tax deductible, right? So you would get a K1 for your tax return. You'd show an $80,000 loss. That would be a working interest of 100K into this, active operation. And we then start drilling for oil and gas. It's a fund that's 50-50, both oil and gas, and starts paying double digits monthly passive income from there. And then we look to actually do a divestiture in about 18 months where we will sell part of the portfolio of assets to either like someone like a pension fund who wants the income, or a bigger producer like ConocoPhillips who says, okay, we're going to buy 100 million of these assets, increase our footprint, right? This is a great, deal for us. So there is an exit on the back end as well. And then interestingly enough, you can actually do a 1031 exchange in oil and gas as well. So strategically, we will always have a subsequent fund to roll assets into where people can continue to defer taxes as well as reinvest principal and get the same, active losses in subsequent years.
Very cool. I appreciate that explanation. Makes a lot of sense. So how would folks get a hold of you? Is there a good website to reach out?
Yeah, sure, Mike. Appreciate that. Really the best way is you can get a free copy of the ebook version of the Holistic Wealth Strategy at pantheoninvest.com/wealth-strategy. So you could basically go there and get into the circle. That's really the best place. Or, feel free to check out our podcast as well, Wealth Strategy Secrets of the Ultra Wealthy.
Thank you, Dave. I appreciate you sharing. Thank you for coming on a podcast, and looking forward to get a copy of your book. And again, thank you for your service as a Marine. Enjoy your family. Sounds like you have 4 wonderful kids. So you're blessed. So thank you again.
You bet. Thank you, Mike. Grateful for the opportunity.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike's slot name. Keep listening and keep investing Big Mike style. See you on the next episode.